What's going on, guys? Mike here, and welcome back to another video. So today's topic is one that everyone's been asking for, and that is to go into the details as to why I added TEC.TO to my portfolio mix. Now, I'm going to guess we're going to have some new viewers here today, and so before we can get into those meat and potatoes, we really need to just kind of quickly recap the construction of my portfolio so everyone is on the same page. So starting things off with on the passive dashboard, again, I just want to highlight, if you guys don't use this and you have multiple accounts like RSPs and TFSAs and spread across multiple brokers, this is an amazing utility or tool that you can use to combine everything together. Maybe you have your wife's TFSA, your TFSA. Again, you can put it all here and see as a very high level as to how everything is performing. If you're interested in passive, definitely check out the link below. So as you can see, I do have a LIRA, a TFSA, and an RSP account. Now, going through those at a very high level, you're going to see I have XEQT in every one of those accounts. So I classify XEQT being my core ETF. Now, I've never really mentioned this before, but I kind of categorize my style of investing as a core and explore style. So that means I have a core ETF such as XEQT, which is a globally diversified fund, and I'll just kind of quickly highlight that in a few moments. And then at the end of that core, I have the Explore, where I kind of take the opportunity to potentially put small increments of my portfolio into, let's say, TEC.TO, because I'm in the IT industry and I do see trends that the tech sector is definitely on the continuous growth that it's been on for the last 5 years. So maybe that's where I want to take a 5 or a 10% allocation of my portfolio and allocate it to something like TEC.TO. I also I'm a big believer in blue chip stocks, for leveling out a portfolio. So like Enbridge or like TD for those nice consistent dividends. So again, taking a small percentage of maybe 2% or 5% out of my Explore portion of my portfolio to allocate funds to those desired locations, right? So that's kind of where I get the core and Explore. Let me know in the comments below if it's something similar that you guys do, or maybe you're just like a 1 or a 3 ETF kind of person that's just more of a set and forget. If you have checked out my other videos, like my latest portfolio update, you will notice that my set and forget, which is my LIRA, the most boring portfolio being XEQT and bonds, is the best performing. So my Explore does seem to hinder my growth overall, but again, it keeps me intrigued, it keeps me involved in my investments, so I do feel that the Explore portion plays a vital role into continuing my financial freedom. So getting into just XEQT, for again, those that are new to the channel, XEQT is a global diversified fund that has over 9,000 different equities. The exposure, ranges from U.S. primarily, then Canada, and then the rest of the world essentially. So this is why it's a really good core ETF. Now, anything that I add as my Explore portion of my portfolio, it is already going to be in XEQT. So yes, there is overlap. Now, again, I'm aware of this, and in certain times, like I said, in the tech center, maybe someone wants to be a little bit more exposed. Maybe they want to take a bit more risk, and that's fine, in my opinion. Some people will argue it, but this is kind of my style, and it works for me, right? So getting a little further deeper, or a little bit more deeper into XEQT, this is kind of where my whole thought process started with TEC.TO. As I was kind of looking at these sectors that XEQT is in, and I noticed that technology was at 19.73%. Now, when I saw this, I was like, oh, that's good, because I want to be exposed to tech, because over the last number of years, tech has been a great growth sector in anyone's portfolio. Growth being obviously capital appreciation within an investment portfolio. So tech, like I said, big growth over the last number of years, which I will highlight here in the next little bit. Now, when I started realizing, okay, if my funds are in, say some financials and like VDY being in energy and Enbridge, what is my actual tech exposure in my core and Explore portfolio? Well, doing the numbers, I had only 14%. So that was taking my XEQT and doing the math and figuring out that once you minused out everything else that I was kind of in, I actually only had 14% of TEC Exposure. So of course I did have a large amount, which was $4,000 out of the $66,000 the portfolio consisted of in PSA, which is a high interest savings ETF. So what I've been doing over the last number of weeks is I've been selling off my PSA and I've been distributing it into a kind of a new target allocation. And this is where I want an additional 5% of my funds to be in TEC.TO. So currently I sold off half of my PSA position, and so that brought me up from 14% to 16.11% overall in the TEC sector between my RSP and my TFSA. Now, the other thing is too, is that once I sell off the other half of PSA, as well as I continue my bi-weekly contributions, my end goal is to bring back that close to that 19% of what XEQT had invested into the technology sector. So, and I'm going to be doing this through TEC.TO. So of course, being in TEC.TO, it is going to bring more volatility to my portfolio, because of course I had $4,000 allocated into PSA.TO, which is again a high interest savings ETF, and it always just accumulates interest. So it was really kind of balancing out my portfolio, but I'm only 34 years old. I definitely want to take a bit more risk, because I do feel that in the long game, tech is definitely going to be growth. Yes, I could invest into it today and it could drop $5 or $10, but I do feel that over the next 10 years, with the new trend of AI, that I do believe that every tech company in the world is going to benefit, and every business that's not involved in AI or into tech is going to need tech to be successful. So you can see here, over the last 5 years, TEC.TO itself has gained a whopping 138%, which is unreal. So of course, you look at companies like Nvidia that have gone up like hundreds of percent over the last couple of years. I do feel that's too risky for me. I do believe that going into more of a globally diverse fund, which is TEC.TO, being a global, not just focused on the US, but it is a global tech fund, which still fits my XEQT style, being a globally diversified fund, right? So you can see here, looking at it, it is still 86% in the US, which kind of makes sense, because the best typical tech companies there are in the world do typically come from the US. But you can see, Microsoft, Apple, Nvidia. Nvidia was a really big one that I wanted to get more exposure to, because there's only like 1 or 1.5% of exposure in XEQT with Nvidia, which I just didn't feel was maybe enough, because with Nvidia and AMD being the major players within the AI technology stack, I did want to increase that exposure. So Nvidia being at 8.91, and AMD is coming in around 2% of the TEC.TO. So I also want to mention that there is a TECH.TO and there's TEC.TO. This is TEC.TO, not the actual word. So I had some people commenting on a YouTube short that I had that was, Nvidia is not in TEC.TO, and it's in this particular TD fund with the global technology leaders. So I hope you guys found that helpful. This is the biggest reason why I wanted to increase my exposure to the tech sector, and I wanted to bring it back up near that 20% allocation. So I hope you guys, like I said, found this useful. Leave the comments below what you're doing in regards to your portfolios. Are you a core and explore style, or are you more of a set and forget? We'll see you guys next time.